Good morning, everyone. This is Dan with Data Trend. Today is Thursday, December 24th. It's Christmas Eve, and we're going to talk about the February core income butterfly trade that we have open. It's getting close to an upside adjustment point, and so I may need to do something today. And I just wanted to walk through what the market's been doing and what the trade looks like, and see what our options are. Before we do that, we need to go through the disclaimer. Essentially, this says Theta Trend is not a broker dealer or an investment advisor. I have no way of knowing what level of risk is appropriate for you. You should be aware of all of your risks before trading options, and options trading in and of itself is a risky endeavor and you can lose money. And this video, of course, is presented for educational purposes only and is not a recommendation to take a trade. So, with that, let's go ahead and close the disclaimer. What we're looking at here, this is the February CIB trade, and this trade was entered last week, so about a week ago, say. It was last Friday, so just under a week. And right now it has about 56 days to expiration. And it's the 1070, 1120, 1170 RUT put butterfly. And then on top of that, we have the 115 IWM call, as you can see right here. And right now, the RUT closed yesterday at 1152.82, and the position's drawn down about $50 or so. So not a big deal, but there is a little bit of an open loss on it, which is pretty typical. The point at which I'm looking to adjust this is really as soon as it gets outside of the expiration break-even tent. I usually give it a little room to move and things like that. I'm not going to chase it, the second it touches this level. But, so we said maybe this 1163, 1165 area, if the market gets up here and seems to be staying here, then it's going to be time to bump out this tent and trap the RUT again. If we see that, we can expect this position to be down. It's really hard to see, but it says about $78 or so, something like that. So what I want to do real fast is go over here and take a look at the Russell and just create some historical context. So this chart here is a weekly chart of the RUT, the Russell 2000, and I have a couple of longer term trend lines drawn on this chart. So the first trend line is this big one down here, and this starts way back after the crash in 2008. So this is the low in early 09, and this is a big long-term trend line. The other trend line is more recent, and that started back here in 2011. And the Russell basically respected this trend line for quite some time. It came down and tested it here. And again, these vertical lines are years, so it's respected this trend line for quite a few years. And then this fall, I went a little bit too close there. This fall, the Russell fell through that trend line, and after doing that, it rallied back up. It hit that level, and it failed to move higher, and it broke down again. And now we're sort of in this area, I guess you'd say, of consolidation, and we're trapped below this trend line, but we haven't quite pulled all the way back down to the long-term trend line. So if we come into the daily time frame, one of the things I've noticed here lately is this was the crash down here in August, mini crash really, and since that time the Russell's basically traded within this area of consolidation, and I've kind of put this gray rectangle around it to illustrate that area. And essentially the market's been kind of trapped below this 1200-ish level. The high here is about 1205, but it's really having a hard time getting above that. And then every time it comes down here, kind of into this 1120-ish area, the market finds some support, finds some buyers, and it bounces. And that, again, is what we saw this week. We saw the market a couple weeks ago try to push down through the bottom of it. It failed. Got to push higher. This was Fed day right here. And then we had the sell-off after the fact. And then this week, Monday, Tuesday, Wednesday, we've just had this, I guess you could call it a low-volume levitation. So there are some buyers, but there aren't many participants this week. But at any rate, the market is trading higher, and it's kind of, poking above this level of resistance here, potential level of resistance. So if we come in even closer now, come down to, this is the 65-minute time frame. So what we're looking at here, this is the 10-day simple moving average, and this is the 5-day. We were in this period of pulling back. We had the little bit of a pop higher, then the pullback. And now we've come right into this area of potential resistance right around the 1150-ish area. And if we recall from looking at the picture of the butterfly, our level where we're going to need to adjust is kind of right up in here. It's in this 1160-ish area. 60 is about where the expiration break even is. So, we're getting pretty close here. And if that happens, what we're going to do is we're going to add another butterfly that'll stretch out the tent, and we'll add another IWM call to flatten out the delta. So that's kind of the scenario. And if we do that, it's going to give us probably about another 10 points or so, maybe up to 1175. And we're just trying to move with the market here. We're not really trying to predict it. I was a little bit bullish coming into this week, and that's been validated, but frequently I'm wrong. And it's just a matter of reacting to what actually plays out rather than trying to predict what's going to happen. So going back here to this position, this was that level we were talking about, that 1165-ish area. Let's just call it 1160 to 65, kind of that range. That's the point at which I'm going to say, okay, we probably need to do something here to adjust this butterfly. And the next step in adjusting, it's going to be to add the 1140 put butterfly, which I've analyzed here. So we have the 1190, 1140, 1090. And those strikes are centered 20 points above the current 1120s. So if I click this on, we're looking at something like this. And so what you can see is if we were just to add this butterfly, we're here at 1150. We're going to go into a situation where we're pretty short delta. These are RUT deltas, so we'd be short 7 RUT deltas, 7.5. And we need to flatten out this T plus 0 line a bit because I don't want the position to get too drawn down. So if we go up, what I'm saying is, okay, if we take that 74 and we make it IWM deltas, or the 740, it's going to become 74 in terms of IWM. So you can see here about 75. And I like to be a little bit short delta, but under 5 for sure. And so I'm just looking for something that'll pick up, most of that short delta, but not all of it. And so what I'm looking at right now is the Feb 113 IWM call, and that has a delta of about 57 right here, you can see. And so if I click on this and analyze it, what we end up is something like this, okay? And I'm going to just go ahead and put this back in terms of RUT so we're thinking about the right points. So we're here at 1152. If we get that move up to 1165, this is going to be our adjustment. And you can see it really doesn't give us a whole bunch more room. It stretches out the tent a bit. And our next adjustment point is going to move somewhere up into this, low 1170-ish area, something like that. And that's the point at which we can either roll up the 1120 or we can add the 1160 butterfly. And it really just depends on what the market's doing at that time, what makes sense. So at any rate, I hope that helps. This is what I'm looking at for the day. That's what I think of the Russell. I do think we have the potential here, going back to this daily time frame. Oops, went a little too far. To trade at least up to the 50-day simple moving average, getting up and above that, I have no idea. The market's really just sort of sideways and consolidating here, and I kind of expect that to continue at least through the end of the year, and then we'll see what happens in January. Nobody knows. So I hope it helps. Happy holidays, everyone, and we'll see you again soon.